Bitcoin's price prediction for the period 2025 to 2030, with deeper exploration into individual factors. Imagine a world where one Bitcoin is worth more than $500,000. Could this really happen by the end of this decade? And what will it mean for your financial future? In this video, we're breaking down Bitcoin price predictions for the years 2025 to 2030, uncovering the key trends, risks, and exciting opportunities that lie ahead. If you've ever wondered, should I invest in Bitcoin today, or is it too late? Stick around. We're answering all your questions and more. Let's dive in. 2025 to 2026 price projection, deep dive. First, post-halving impact, 2024 halving. Bitcoin halvings occur approximately every 4 years, with the next scheduled for 2024. These events significantly reduce the flow of new Bitcoin into circulation, creating a supply shock. This reduction in rewards for miners, from 6.25 Bitcoin to 3.125 Bitcoin per block, aligns with Bitcoin's program monetary policy of deflation. Past halvings have catalyzed exponential price growth due to two critical factors. Market psychology: investors anticipate price surges post-halving, leading to pre-halving buying pressure. This FOMO, fear of missing out, amplifies demand. Supply constraints: the reduced number of Bitcoins entering circulation pushes up scarcity in the market, especially if demand remains consistent or increases. Historical precedent suggests a lag period of 12 to 18 months post-halving before the price peaks. Following the 2024 halving, Bitcoin's price in 2025 could reflect this historical cycle. Second, institutional adoption. Institutional demand expansion: big players like banks, mutual funds, and wealth managers are finding Bitcoin an attractive, inflation-hedged asset. A broader trend of financialization can increase liquidity in Bitcoin markets, reduce volatility with a larger investor pool. A key point is Bitcoin exchange-traded funds, ETFs, which allow retail and institutional investors exposure to Bitcoin without direct custody. As of 2025, wider regulatory approval for ETFs could spur mass investment. Influence on sovereign strategies. Bitcoin may also gain recognition as a potential component of sovereign reserves. Developing economies and even a few forward-looking nations might consider diversifying with Bitcoin, much like how they hold gold or foreign currency reserves today. El Salvador's precedent provides a blueprint. With global reserves growing, Bitcoin integration on this scale could significantly impact its valuation. 3. Geopolitical and economic uncertainty. In regions where political instability and inflation plague national currencies, e.g. Venezuela, Argentina, Turkey, citizens increasingly use Bitcoin as a hedge. By 2025 to 2026, more developing markets could exhibit Bitcoin adoption for cross-border remittances, savings, or even daily trade. For instance, remittance markets exceeding $800 billion annually already turn to Bitcoin for cheaper, faster transactions. Ongoing concerns with rising fiat currency inflation worldwide may turn more individuals and institutions toward Bitcoin. Price scenario: bullish. A supply shortage paired with massive adoption might lead Bitcoin to exceed $150,000 by late 2025 or early 2026. Bearish. Regulation or dwindling hype could slow demand, keeping prices around $70,000 to $80,000. 2027 to 2028 price projection, deep dive. 1. Mainstream integration of blockchain technology, Bitcoin as digital gold and beyond. By 2027, blockchain applications might become integral in financial, healthcare, and government systems worldwide. Bitcoin, recognized as the original cryptocurrency, will likely maintain its position as a secure, decentralized reserve asset, separate from speculative or transactional crypto use. If global financial systems begin to integrate blockchain directly, It can establish Bitcoin as the backbone of new blockchain settlements or escrow systems. Cement its role as a stable asset anchoring other blockchain projects. Second layer, two solutions and use case expansion. Scalability challenges. Bitcoin's primary blockchain processes 7 transactions per second, TPS, unsuitable for large-scale usage compared to Visa. This constraint has historically prevented Bitcoin from becoming a practical day-to-day transaction medium. However, Layer 2 solutions like the Lightning Network provide alternatives by processing transactions off-chain, reducing fees and latency. By 2027, Bitcoin microtransactions might become common, particularly in underbanked regions. Entire ecosystems may depend on Layer 2 networks for gaming, reward systems, or content monetization. DeFi, decentralized finance. DeFi is an area currently dominated by Ethereum, but should Bitcoin develop competitive smart contract functionality via sidechains or technical advancements, it could attract immense capital flows into lending, borrowing, and yield optimization protocols. 3. Financial innovation and macro dynamics. In the backdrop of a slowing global economy or shifting monetary policy, e.g., major interest rate cuts or inflation spikes, Bitcoin's function as a decentralized and deflationary hedge could become clearer to conservative investors. Macro trends like banking trust issues or persistent devaluation of fiat currencies, e.g., USD, would accelerate institutional and retail reliance on Bitcoin. Price scenario. Bullish. Broader mainstream use and significant scarcity push Bitcoin beyond $200,000 to $250,000. Bearish. Technological stagnation, competitive blockchains, or sluggish growth in adoption may lead to consolidation between $100,000 to $150,000. 2029 to 2030. Price projection deep dive. 1. Supply scarcity amplified by halving cycles. By 2030, Bitcoin supply will near the 21 million maximum cap, a powerful narrative for long-term investors. Following the 2028 halving, block rewards will drop to 0.78 Bitcoin per block. This will likely decrease the annual increase in supply to less than 0.5% of total Bitcoin circulation, an unprecedented level of scarcity. If institutions, governments, or even 10% of the world's wealthy individuals allocate capital into Bitcoin, its supply will become increasingly constrained, driving prices. Second, global adoption as financial infrastructure. Government-level policies. By the late 2020s, Bitcoin could achieve regulatory clarity, potentially becoming legal tender or recognized financial collateral across multiple countries. Newcomers in the global financial sector, especially in emerging economies, may embrace Bitcoin's accessibility and low-cost borderless nature. Regulatory clarity can remove hesitancy among institutional investors and promote trust within the wider public. Unbanked population focus. There are over 1.7 billion adults globally who lack access to formal financial systems. Bitcoin, paired with mobile wallet technologies, could be a game changer in fostering economic inclusion. Greater grassroots adoption, particularly in Asia and Africa, would anchor Bitcoin not only as a speculative or institutional hedge, but as functional money. 3. Rival blockchains and technological advancements. Despite Bitcoin's dominant position as digital gold, newer blockchain solutions boasting superior technological efficiency, like Ethereum 2.0, Solana, or Polkadot, could threaten its market share. Competitors focusing on energy-efficient mechanisms, proof of stake versus Bitcoin's energy-intensive proof of work, may gain market preference unless Bitcoin innovates in consensus models. 4. Sustainable mining and environmental considerations. Environmental criticisms remain one of Bitcoin's primary long-term hurdles. Sustainable mining solutions, using hydro, solar, or other renewable energy sources, are likely to expand as mining companies strive to comply with regulatory pressures and carbon reduction goals. Enhanced reputation through green mining could bolster Bitcoin adoption globally. Price scenario. Bullish, universal adoption, coupled with extreme scarcity, skyrockets Bitcoin's price beyond $400,000 to $500,000 plus. Bearish, headwinds like competitor dominance or societal pushback on crypto energy use could keep Bitcoin between $200,000 to $300,000. Risks and challenges, expanded exploration. Regulatory risks. Nations attempting to undermine cryptocurrency, e.g., through taxation, censorship, or bans, could limit Bitcoin's growth potential. Technological threats. Quantum computing may someday challenge Bitcoin's cryptographic security. Unless Bitcoin's protocols evolve, vulnerabilities could deter investors. Economic recession. In prolonged recessions, speculative assets like Bitcoin may see reduced inflows as investors prioritize tangible assets, e.g., real estate. Shifting preferences. Advanced blockchain platforms tailored for smart contracts or privacy could erode Bitcoin's dominance if it does not diversify its functionalities. By 2030, Bitcoin is poised for monumental shifts driven by adoption, scarcity, and evolving financial systems. A high-growth scenario sees prices beyond $500,000, while a more conservative outlook, constrained by regulations and competition, envisions prices stabilizing between $200,000 and $300,000. Strategic innovations, scalable solutions, and sustainable practices will ultimately shape Bitcoin's future trajectory, cementing its role in the global economy. As you've seen, the future of Bitcoin is both thrilling and unpredictable. From halvings creating scarcity to its potential as the global financial reserve, Bitcoin is set to challenge everything we know about money. Whether it soars to $500,000 or finds itself evolving in other ways, one thing's for sure. This is a story you don't want to miss. Here's a question for you. Do you believe Bitcoin is the future, or do you think there's something better waiting in the wings? Comment below and share your thoughts. If you found this video insightful, don't forget to like, share, and subscribe to stay updated with the latest insights on crypto and beyond. Let's grow and learn together. Until next time, stay curious and keep investing in your future.